The situation with the Pump.fun token is very much comparable to what your insecure friend might do. Your insecure friend has some kind of flaw, people are mocking him for them, and because of that, there's overcompensation. Now, I believe that the Pump.fun team is now overcompensating. After an initially very rocky launch, we've now got a buyback program. It's pushing up the price way above what people expected. The Pump token is the most liquid token on the Solana chain now. It's got $26 million worth of liquidity, and so it was finally able to flip Fartcoin. Now, in the last 24 hours, we saw 8 billion with a B worth of trading volume on Solana. How much of that is Pump.swap? The answer is 5.8 billion. So the Pump ecosystem is becoming an ever more important part of Solana. And so in the last 3 weeks, we have seen a massive rally in Pump. How much of that rally is artificial and how much of it is organic? We're going to discuss this in this video. Since August 26th to today, we have seen the Pump token doing more than a 3x, a gain of 209%. That then, of course, begs the question, how much more short-term upside potential is there? Now, here's a relative valuation chart of Pump to Solana. And this is what I mean by the situation with your insecure friend. Initially, the launch was incredibly problematic. The price of Pump underperformed Solana by 70%. Now, the reason why the Pump.fun ecosystem got so successful in the first place, why so many meme coins got launched on their platform, is because everything was fairly launched, as in there was no increasing token supply. That was different though for the Pump token itself that launched many months after the actual platform. And because of the token dilution, we saw massive skepticism. That's why we saw the underperformance. Have a look at the tokenomics of Pump over time. We launched at 430 billion Pump tokens. And at some point, this will grow to 1 trillion, but so far no tokens have been unlocked. But just the information that at some point tokens will be unlocked was already enough to depress the price. Now, on the Solana chain, we've got 93,000 holders. And just looking at the number of holders in isolation over time, this looks incredibly bullish. We have seen initial adoption when the token launched, then people got somewhat skeptical, and now things are picking up again. But who's actually buying here? Is this a lot of new whales entering the space? Is this small retail entering the space? I don't think that this chart is actually enough to figure out what's going on. A better way to look at the data is over here. What we see over here on the left is the number of retail investors, the number of wallets that hold at least 125k Pump tokens. At the current price, it's roughly $1,000 worth of the token. In the middle, we go at 10x, so that's $10,000 worth of the token. On the right, another 10x, so that's $100,000 worth of the token. We can see that the number of whales did not really go up much. The number of medium-sized investors did go up slightly. The number of small retail investors did hit a new all-time high. So it seems like the recent buyback program is mainly a story for the retail crowd. The whales aren't really impressed. And again, while this might look like the number of holders is accelerating again, and we are pretty much doubling just in a few weeks, once we remove the very small holders, we didn't see how this doubled. There is some growth, but it's not as significant as the total number of holders would suggest. By the way, I publish videos on the Pump token regularly on this channel, so feel free to subscribe over here. Meme coin trading comes in waves. As in, there are some tokens that appreciate, that invite a lot of new investors coming into the space, and some of those people get burned, right? Capital concentrates towards a few winners, and then the market contracts again. And this cycle tends to repeat. What we've got over here is the decentralized exchange trading volume on Pump.swap. The question is, how much of this trading volume is actually organic, and how much is this potentially automatic wash trading as well? Here's the revenue of the Pump protocol over time. It is not growing as much as the decentralized exchange trading volume because fees on Pump.swap can be very low for the small caps. But the total value locked, so the capital that's in Pump.swap, is growing quite consistently. It's currently above 300 million. So this growth is exciting, but it's not this chart that's causing the price to go up. Because with this 65% price increase in the last month, the market cap of the Pump token is way above the total value locked. It's way above how much capital is currently in the project. So again, the TVL is above 300 million, but the market cap of the Pump token is almost 10 times of that value. It's close to 3 billion. Pump has helped the entire Solana ecosystem to grow over time. And so Solana, as a fraction of all of crypto, did rise quite a bit. In the last 3 months, we have seen Solana outperform most other cryptocurrencies by 44%. But this trading range that we see over here, it was established 2 years ago. So we have been trading between 3.8% and 2.2% dominance. And of course, in case Solana comes down from here, this will also have a negative impact on the Pump token as well, because the Pump token is traded against Solana. And so really, it's not the number of whales that are pushing up the price, but it seems like the buyback program, or at least the story around the buyback program, can create some excitement. So whatever revenue is generated on Pump.fun gets funneled into purchasing the Pump token itself. The purchasers as a percent of the previous day's revenue is over here. It fluctuates around the 100% mark. And the revenue itself, measured in Solana, is close to an all-time high. And so the entire buyback program has so far purchased 100 million worth of Pump. Now this sounds like a big number, but again, we are looking at a $3 billion market cap token. And there are other forces that influence the price as well, forces that might be even stronger than the buybacks. And that's the levered bets on the price, the perpetual futures. So most people bet on rising prices of Pump on the perpetual futures market. The funding rate is positive, the longs have to pay the shorts to get more price exposure to Pump. But the open interest is correlated with the spot price. And the open interest is at an all-time high. It's now above $1 billion. And this is the potential risk of the Pump token. If we do not see as much buybacks anymore, and at the same time there's less speculation around Pump, the open interest is going down, then the spot price is likely going to follow as well. So there is strong bullish short-term momentum. Now, why do I say short-term? It's because the people that buy the Pump token via the perpetual futures, they do this with leverage and they do this in order to actively trade. If you're long-term bullish on Pump, you might as well just buy this on the spot market. On the spot market, there's no leverage, but there's also no financing costs. And so when there's no financing costs, we can afford to keep the token for longer. People that tend to buy via perpetual futures, they tend to get in and out of the token very quickly because, again, holding it long costs a lot of money. Getting in and out doesn't cost that much because the spreads tend to be smaller for the perpetual futures market. And so whatever money flows into an asset via the perps is potentially risky money. It's potentially money that can also flow out quite quickly. And so really, we have to have a very close eye on the revenue. We have to have a very close eye on the buyback program. And when Solana dominance hits those higher levels again at around 3.8%. And if the Pump token relative to Solana hit the all-time high, that's another outperformance of 35%, then it very likely makes sense to take some profit. Because again, there is the risk that the short-term capital in the token could leave again. And the whole idea of the buyback program was simply to stabilize the price. And that has obviously then been achieved. The buyback program was a reaction to an initially dumping token. If then the token has recovered fully and then the token unlocks happen slowly but steadily, that's a time to definitely take some chips off the table. Now here's a common misconception. Most people think that there's some kind of a direct connection between risk and reward. As in, if we are willing to take on more risk, we should also get more reward long term. But it's actually not true in crypto. This is the smaller altcoins and their performance in the last year. There are 2 altcoins out of those 100 alts that actually did better than Bitcoin. There is Purple Pepe and there's the Cult token. Bitcoin during the same time almost doubled. But have a look at all of those other tokens. It's to be expected that the majority loses, but is it really expected that in case you get the winner, you only outperform by 250%, or in this case, only 35%. Had you bought a somewhat diversified portfolio of those altcoins, you're pretty sure to have lost versus just buying and holding Bitcoin. And again, a diversified portfolio of those tokens is definitely more risky than Bitcoin is. So really, there is no direct connection between risk and reward. We always have to figure out what's the best risk-adjusted return in the market. Or have a look at this, the Pump.fun ecosystem that recently starts to get some traction again. How many people actually make money with Pump.fun? The answer is very, very few. 99.6% of Pump.fun traders have not made $10,000 in profit. And I would argue that $10,000 of profit isn't even that much in crypto. It really poses the question, does it make sense to enter a game where there's a 99.6% likelihood that the game will not end up that well? There's all kinds of reasons for the long-term underperformance. There is a potential selling by insiders that simply scoop up a lot of tokens very early on and then sell as the momentum increases. There's also secret over-the-counter dealings, as in big venture capital firms that might buy up tokens for a discount and that then dump those tokens once they release, once the vesting period unlocks. That's what happened here with Mantra DAO, with the Ohm token. That went from above $8 all the way down to 21 cents, right? More on this was discovered in the interview by CoffeeZilla with the founder of Mantra DAO. But most of the time, the declines in the price aren't that dramatic. They're simply just gradual underperformance because of gradual unlock. What we're seeing here is the weekly unlocks of the altcoin market. It tends to hover at around $1 billion. So if there's not at least an additional $1 billion worth of demand every single week, we tend to see underperformance of the alts. By the way, Bitcoin has a weekly mining of roughly 300 million only, and Bitcoin is much larger than the entire altcoin market. And of course, Bitcoin also gets purchased through the ETFs and through the treasury companies, which cannot be said for the majority of smaller altcoins. And so that's why Bitcoin tends to do better than most altcoins most of the time. Let's have a look at a token that will see some unlocks. For example, here, the Ape token. This is the circulating supply over time. And again, if demand doesn't grow as quickly as supply, then the price has to go down. And so this is Ape relative to the US dollar. And this, of course, then opens the question, does it potentially make sense to still make money with this? Because there are various instruments to bet on falling prices and make money with falling prices. The problem with doing that is that sometimes we do have our rallies as well, right? This is a rally of 270% in Ape. A lot of those smaller rallies have something to do with the market in general going up, because there's all of this correlation, right? When Bitcoin goes up, when Ethereum goes up, then most altcoins go up as well, and vice versa. So just betting on falling altcoins plain and simple like this is very risky as well. But there is a solution. We can bet on falling prices of ApeCoin in this example, at the same time rising prices of Ethereum. Now this chart looks much less volatile than this chart, right? There's less short-term rallies and we see more constant underperformance over time because now we filter out a lot of the macro development. Betting on falling prices like this is much better. So we're basically flipping this chart around. We're going short Ape, we are going long Ethereum, we get this performance. And there is a levered effect. So for example, had you opened that position 2 years ago, you would have made 476% gains, while the supply of Ape tokens didn't even double during that time. So the leverage effect works in both ways. An additional dollar into the ecosystem increases the market cap by more than $1, but also every dollar that's getting pulled out of the ecosystem tends to decrease the market cap by more than $1. It works both directions. And so this here is the performance on a logarithmic scale. This is the same on a linear scale. And this is the way how I personally make my money in crypto. I don't try to find the next 10x altcoin that's likely going to burn us. I simply just bet on the market structure. The market structure is that the venture capitalists and the early investors and the team, etc., all those insiders, they tend to offload tokens over time. There's constant selling pressure on many altcoins over time. Just think about this logically. What would you rather try to do? Find the 1 or 2 altcoins that are green on this screen, or just flip this entire picture around and everything that's red becomes green and everything that's green becomes red. Suddenly the odds are in our favor, right? If we bet on falling prices of altcoins relative to the rest of the market. I have followed the strategy for the last 4 years, and had I just dollar cost averaged into Bitcoin, I would have gotten the return that's shown here by this light gray line. But instead, because I also bet on falling, very poorly performing altcoins, I got the performance that's shown in the black line. So we can generate relatively consistent outperformance. Yes, there are a few months where we're just going sideways and where we don't necessarily make money. But the overall trend is very clear. And so it might seem a bit complicated, right? We're not just buying an altcoin, we're betting on rising prices and on falling prices. And we don't even just use the spot market, we're even using perpetual futures. So we use derivative contracts. It all seems a bit complex, but in the end, it's actually not that hard. I have made dedicated videos on the topic, and you can simply just watch those videos. The most important ones are over here, using perpetual futures to bet on relative valuations, and also extremely important, risk management with relative valuation bets. Once you've watched those two videos, which in total is just 1 hour of content, you know exactly what to do in order to get performance like this. I'm so confident in this strategy that after you have watched those videos and you've joined the community, I will send you my favorite trade. Now, my favorite trade is not anymore betting on a falling ape price, because the circulating supply of ape will not go up that much anymore, relatively speaking. But I will show you my favorite trade, and if you do not make money with that favorite trade, when you've joined premium and the favorite trade didn't make you money within the first month of holding the position, then I will refund the premium membership fee to you. So just join the trade, see if you make money, and if you don't, then this $125 are never spent. I will just send this back to your credit card. There's also a way to pay for premium in crypto that's also described on the page that's over here. The minimum duration for crypto payment though is 3 months. So you might want to start out with credit card first. I am of course sharing every single trade that I make. So I'm not just sharing my favorite trade where there's the money back guarantee. I'm sharing every single trade as I make them in real time in the chat. A link to premium should pop up directly here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.